The global economy is in a state of flux. Old certainties have vanished. New challenges are emerging rapidly. The United States, China, and India illustrate these turbulent times. Their stories are interconnected, each impacting the global economic landscape. From inflation to supply chain disruptions, the path forward is uncertain. Understanding these trends is crucial. We need to grasp the forces at play. This will help us navigate the complexities of the global economy. The stakes are high. The decisions made today will have lasting consequences. In the United States, inflation has been a major concern. Prices for goods and services have risen sharply. This has put a strain on consumers and businesses alike. The Federal Reserve, America's central bank, has taken action. They have raised interest rates to combat inflation. There are signs that these measures are having an impact. Inflation has cooled somewhat in recent months. However, it remains above the Fed's target rate of 2%. The question on everyone's mind is whether this trend will continue. The Federal Reserve faces a delicate task. They must balance the need to control inflation with the risk of slowing the economy too much. Raising interest rates too aggressively could trigger a recession. However, failing to act decisively on inflation could lead to even bigger problems down the road. Economists are divided on the best course of action. Some believe that the Fed should continue to raise rates until inflation is clearly under control. Others argue that the Fed should pause its rate hikes to assess the impact of its previous moves. China, the world's second-largest economy, is facing its own set of challenges. After decades of rapid growth, the Chinese economy has slowed considerably. This slowdown is due to a number of factors, including the government's crackdown on the tech sector, the ongoing trade war with the United States, and the lingering effects of the COVID-19 pandemic. The Chinese government has announced a series of measures aimed at stimulating the economy. These include infrastructure spending and tax cuts. However, it remains to be seen whether these measures will be enough to revive growth. Section 5. The missing consumers in China's economy. One of the biggest challenges facing China's economy is weak consumer spending. Chinese consumers are saving more and spending less. This is partly due to concerns about the economy. It is also driven by a lack of confidence in the future. This lack of consumer demand is having a ripple effect throughout the Chinese economy. Businesses are reluctant to invest and hire when consumers are not spending. This vicious cycle is making it difficult for the Chinese economy to gain traction. Section 6. India's mining conundrum. India, the world's most populous country, is also grappling with economic challenges. One of the most pressing issues is a Supreme Court ruling that has halted mining operations in several states. This ruling was issued in response to concerns about the environmental impact of mining. The mining sector is a significant contributor to the Indian economy. It provides jobs and generates revenue. The Supreme Court's ruling has created uncertainty for the industry. It has also raised concerns about potential job losses. Section 7. The Supreme Court's impact on Indian mining. The Supreme Court's ruling has forced the Indian government to reevaluate its mining policies. The government is now under pressure to balance the need for economic growth with the importance of environmental protection. The mining industry is urging the government to find a solution that will allow mining operations to resume. They argue that the industry is vital to the Indian economy. Environmental groups, however, are calling for stricter regulations on mining. Section 8. Quick commerce, a rising star in India. Amidst these challenges, there are also bright spots in the Indian economy. One such bright spot is the rapid growth of the quick commerce sector. Quick commerce refers to the delivery of groceries and other essential items in under an hour. This sector has exploded in popularity in recent years. This is due in part to the increasing penetration of smartphones and the internet. It is also driven by the convenience that quick commerce offers to busy consumers. Section 9. The key players in India's quick commerce boom. Several companies are vying for a share of India's booming quick commerce market. Some of the key players include Zepto, Blinkit, and Swiggy Instamart. These companies have raised billions of dollars in funding. They are rapidly expanding their operations across India. The competition in this sector is fierce. Companies are constantly innovating to attract and retain customers. They are offering discounts, promotions, and loyalty programs. Section 10. Innovations driving quick commerce forward. The quick commerce sector is being driven by innovation. Companies are using technology to improve their operations and enhance the customer experience. For example, they are using artificial intelligence to predict demand and optimize delivery routes. They are also using data analytics to understand consumer behavior and tailor their offerings accordingly. The use of technology is helping quick commerce companies to improve their efficiency, reduce costs, and offer faster delivery times. Section 11. A glimpse into the future of the global economy. The global economy is at a crossroads. The path ahead is uncertain. The United States is grappling with inflation. China is facing an economic slowdown. India is trying to balance economic growth with environmental concerns. However, amidst these challenges, there are also opportunities. The quick commerce sector in India is a testament to the power of innovation. The global economy is constantly evolving. The countries and companies that are able to adapt to these changes will be the ones that prosper in the years to come.